Hello. Today I'm going to talk about recent market events and some of what I think may or may not happen. As you can see from this chart, this is the total market volume of all cryptocurrencies, and it has been in a downward slope since roughly mid-November. Some people have said that we are in a deep bearish market. I don't know if that's true or not because I don't necessarily see it on the overall short-term trading processes. 1 minute, 5 minute, even the 15-minute and 30-minute still look pretty reasonable comparatively speaking, even with these rather deep downturns. That's not to say that we're not just in a slow, progressive, cascading market. But overall, I think there's good profitability still to be made with a cautious, worst-case scenario planning. Any recipe or combination of strategies is going to do well in this market. It's just a matter of budgeting and planning. I don't believe we are entering the apocalyptic area that many people say we are heading towards, where this is going to be the end of the cryptocurrency markets. There will probably be changes, but any market goes through changes. How extensive is anybody's guess, and prognosticating on such matters only leads to losses. While this particular screen shows that we are in a deep downtrend, if you go to more distant screens, such as the 4-hour or the 1-day charts, you still see that we are in a pretty reasonable uptrend. I do believe the markets are enduring a deep correction, and I believe that most cryptocurrencies are severely overvalued. In order for the crypto markets to really push forward throughout this year, there needs to be some corrective reassociation with a real world realistic value. While it's nice to have a coin go to the moon or to profit 300%, such situations are problematic for long-term market health. A stable market should always balance around a rough median. That doesn't mean that the market won't incur increases or decreases over time. But it does mean that the average of what a market represents is what most people believe is its fair market value. The difference between overbought and oversold, or the difference between not too much exposure and simply over-the-top exposure. I think as we look at this market, we are seeing too much exposure, and now that the hype and glamour of owning cryptocurrencies is really faded over the last 10 years, that moving forward we will see more normalized pricing like what you would get out of the stock market. More consistency with less natural volatility for the more stable and trusted coins. That's not to say that global events aren't going to have an impact in the short term, because they will. But I think you will see the natural progression of the crypto markets to take shape pretty much the way the stock market has. Really, the markets aren't that old. And as many legal jurisdictions grapple with how to manage the markets, it's causing ripples and buckles, much like what is going on currently within the United States and the SEC versus Ripple. So while the government is playing favorites with Ethereum and trying to condemn Ripple, it brings to questionality of favoritism and corruption and cronyism. That's nothing new there for any government, really. There's always going to be winners and losers, and the government is always going to try its best to manipulate everything as much as it can. Again, that is just the part and parcel of the economics of any large corporate government structure. The United States will self-balance to some degree, or it will simply lose its share of the market as more investors go overseas. Governments are greedy, and greed means taxes. So while we see short-term ripples, no government is going to want to give up the lucrative tax pool that this is going to generate. I think that is where a lot of this market is coming from. The United States has been pushing regulation extensively, but as we enter tax season, I think a lot of this is going to be blown off and pushed under the rug as one big bad mistake, especially when they see just how much tax revenue is going to be generated from the crypto market. Like the stock market, it's going to be quite substantial. Probably more so simply because, unlike the stock market, the crypto market is more likely to induce scalpers and short-term trading, which increases the amount of short-term capital gains tax. A lot of fears started in November with over-regulation of the market as a whole on a global level. You can see that here in this chart, and you can track it down to individual assets and individual countries. But more and more it becomes clear that this is going to simply be a passing fad as the governments realize that their own prosperity depends upon the taxes they collect. And if they ostracize entire groups of money-making markets, they're going to collapse in the long run. I don't see cryptocurrencies going away. I don't see this as an apocalyptic event. I see it as a correction. I see it as a manipulative impact of large institutions trying to get into the market at dirt cheap prices by spreading fear and greed. Overall, I think this is just going to be one little blip in a bigger picture that, like any other market, is simply going to continue with its ups and downs. I don't really see any major transitions that's going to significantly impact the cryptocurrency market as a whole. Some countries are going to be stupid and greedy, and they're going to feel the aftermath and the impact of that. Overtaxation has always driven investors out, but they're not going to give up investing. They're just going to move to greener pastures. Foreign markets are going to become more lucrative, while countries that overregulate are simply going to suffer from it. There will be a corrective government practice, and they'll realize the error of their ways. But they won't regain those investors simply because once you burn an investor, they don't go back. Not unless they're forced into it. So, from the standpoint of the United States and any impact it has within this situation, first, I believe it is negligible. Second, I believe it is only detrimental to the United States. And third, it simply means the global markets are going to become more based and sounded for U.S. investors. It also means the United States is going to lose its impact and voice on the global market because it is one country out of 200. The world doesn't revolve around it, and most of the time, the world doesn't give a damn what the United States thinks. Economies depend upon growth, and the cryptocurrency markets offer that growth on a large number and scale that far surpasses anything we've had realistically as an investment tool and opportunity. Moving forward is going to be, of course, filled with bumps and ripples in terms of what we will encounter, both technologically and monetarily. But the long-term economic forecast, I think, is positive. The only thing I think will have a severe negative impact on the crypto market, and really any market in general, is a complete global economic collapse. Such a collapse would pretty much destroy all countries and all wealth, including the rich who want to make themselves richer. That's the downside to being greedy. Greed wants more greed. So countries trying to push some type of a global reset or some type of a financial takeover like what happened in 2020, with pharmaceuticals making as much as $300 million of profit a day. Sooner or later it collapses and they lose everything, because greed can't be sustained indefinitely. Fear and greed drive the markets way too much and more than they should. Fear and greed destroy complete nations. And we are on the verge of seeing that very easily. The long term, though, is simply a blip in time. Short term just means moving money from one area to the other. Planning for the worst case scenario is the only way to sustain and survive the current market unusualities. Volatility will become more aggressive over this next year, I believe. I think as the cryptocurrency markets continue to mature, grow, and expand, you will see a flattening or normalization of that volatility for some of the larger assets. You will always have more volatility for some of the lower assets, particularly the startups. But I think we are just going through growing pains of a maturing market. So really, as we move forward with this year, I see nothing but profits as long as you've planned everything out. I see nothing but very lucrative markets as long as you've done your research. There is no such thing as fear of missing out. All that means is somebody is trying to manipulate you to satisfy their greed. Always do your research. Always take your time. Remember, Nobody knows your financial situation like you. Even if you've paid a financial advisor to go over every aspect of your life, they will still never know your situation the way you do. You must plan for your situation appropriate to what it is, and only you can make those decisions appropriate to your finances, changes in your lifestyle, and your surroundings. Don't get caught off guard. Don't let your emotions drive your decisions. Algorithmic trading has become a very big staple over the last 2 years especially. I think that's going to continue, and I think it's going to grow even more so. Simply because it takes human emotion out of the picture completely, and it guarantees and allows a reasonable aspect of normalization to markets on a 24/7 basis. It can go wrong very quickly though, and that's where you need to test, analyze, and research extensively. There are no easy roads or silk roads to riches. Improving your financial situation isn't a quick or easy process. It's a slow and steady approach, much like a turtle traversing or crossing a barren wasteland. One step at a time, slowly inching its way to its destination. That is the only way your portfolio is going to survive, with careful and meticulous attention. Until next time.